Howdy everyone, how's everyone doing? Hope you're all good. So this is episode 4 of a Beginner's Guide to Technical Analysis. This video is just going to be a bit more dedicated to candlesticks. As I mentioned it, I think it was in episode 1 or 2 briefly, but I just want a full dedicated video just going through candlesticks. We'll jump straight into it. What a day in the market as well, guys. Literally, big tech is popping. You got Tesla coming down a little bit, but that was nearly up 8% before. Palantir up 8%, Robinhood up 8%. Liam, I think, just made a nice gain on Nvidia today. I think it was like a 6 or 7 pop. So yeah, good to see big tech back at it. So just to start off on candlesticks, I'll go briefly what I was on about in episode 1. Hopefully you remembered it from last time. So remember, a green candlestick is a bullish candlestick, alright, because price appreciated. A red candlestick is obviously bearish because price depreciated. So price always starts at the bottom of the candlestick. So a quick example here on Apple, we're on the 1-day time frame. So you can see here, price opened at $198 and then closed roughly on $208. Top and bottom wicks. So remember, this wick at the top here is just the highest point of price that reached, and then the bottom wicks is the lowest point it reached. So just to keep it basic, remember, man, alright, candlesticks are pretty much just red and green shapes that just tell a story. So they're pretty much just telling what direction price is moving. Is it going up? Is it going down? Or a range in a sideways market. First thing we're going to talk about is just engulfing candles. And we're going to stay on Apple stocks. I can already see a good example of an engulfing candle here. So this one right here, it's pretty much in the name. So it's just when this candlestick completely engulfs the previous candlestick on the opening price and the closing price. What we'll do, we'll try to do a bit of a trade example on Apple here with an engulfing candlestick. So I'm just going to go back on the daily time frame here. I think I can see something breaking out, yeah. So you can see roughly like this $197, $198 mark. Yeah, look, so massive point of resistance here. So we've got multiple touches. 1 touch, 2 touch, 3 touch. And then what happens is we get that 4th touch on that resistance point, and then look what happens here. This will be a perfect time to enter the trade because you've got strong resistance here. Remember, multiple rejections, you're going to have a stronger conviction. So on that 4th touch, we're getting met with a massive engulfing candle here. So you could enter that trade just based on multiple touches on rejection and then an engulfing candle. Because remember, it's a bullish indicator. And then from there, you've got a nice safe entry, like a 15-16% gain just from looking at that engulfing candle. Next candle I'm going to talk about just one with bottom wicks. Okay, so all candles with strong bottom wicks do pretty much is trying to tell that sellers are trying to break the support, alright, or if it has a strong top wick, buyers are trying to break that resistance. But then the sellers and buyers keep jumping in to either keep that price down or push the price up. So with Apple, you can already see a good resistance here. I mean, not resistance, good example. Brain's not working today. Yeah, so really good example. You can see previous resistance now acts as previous support. And we can see that also by, if you look at this candle, strong bottom wick bouncing off that 198 resistance level, acting as support, and then you can see price is pushed to the upside. Ideally, if you can get multiple candles with strong bottom wicks, there would be a better reason to enter the trade. So say if prices came down now to this support, which was resistance, and you had like 2-3 more candles with like strong bottom wick, that's going to be a good indicator that buyers are just pushing that price back up. Next candlestick example I'm going to go through is just the momentum candle. We'll jump to a new ticker because I remember seeing one on here. Yep, RKT. Pretty much a momentum candlestick is going to be like 2 to 3 times bigger than that previous candlestick. So this is a good example here. Look, absolutely huge. You will get even bigger ones. Always, this is just an example of just buyers are stepping in. It's a good indicator that price is going to keep pushing to that upside. I like to trade these candlesticks. Yeah, see, when we zoom out, it's even bigger. I like to trade these like sideways, choppy markets. Or remember, that's just another name for a ranging market. What I was going on about, I think, episode 3. Reason why I like trading them in sideways markets is it's because where loads of short traders get trapped. Because look at this example on RKT. So you can see we've got nice resistance up here, and we've got nice support down here, right? So we're just trading pretty much sideways here. We're in a choppy market. So what short traders will do, they'll have the support drawn out, they'll have the resistance drawn out, and 9 times out of 10 they're going to have the stop loss placed like just above your resistance, alright? Because if that hits, that's them stopped out, alright? It's not a good short trade anymore. So what short traders will be doing, they'll be looking this, just range of market, choppy market, prices going up, down, bit of an indecision, no one really knows what's going on. And look at this perfect example of a momentum candle. It's a bit of a tongue twister. But yeah, as soon as we get hit with that big momentum candle, look at that. That would have been stop losses rated. So all them short traders have been stopped out. And then look at the push to the upside. From there, we've got a 34% gain. So that's just going to be a good example of a momentum candle. A few other candlesticks I'll go on about. You've probably heard people talk about them as just a doji candle. Try find some good examples here. Yeah, so right here. So a doji candle is pretty much just indecision from both buyers and sellers. No one really knows what's going on. Buyers can't really keep the price going up. Sellers can't really keep the price going down. You've got different examples of doji candle. So this one here would just be called a gravestone. So that's when it's got a bit more of a stronger base and then a higher wick. And then the opposite to gravestone is you've got a dragonfly. Just try and find a dragonfly. Pretty much just looks like a T. Yeah, kind of like this one. So a T. And then you've just got your regular dojis, things like this. Perfect example of regular. Same with that one. And then you've got your long leg dojis. Something like that. That could class, if that base was a little bit skinnier, that would class as a long leg doji. And then, yeah, so we'll go on to hammer candles. Perfect example, just sitting here right in front of us. Try use a hammer candle as some sort of support, alright? It's pretty much similar to what is going on about on that Apple ticker. What's happening here is sellers are trying to push the price down, alright? Buyers keep soaking it up, alright? Keep soaking it up and keep pushing it up. And the opposite to a hammer candle is just going to be a shooting star. So instead of having a large wick at the bottom, you're going to have a large wick at the top. Try find a quick example of that. Yeah, something like this. So that's going to be a shooting star. So that's going to be a shooting star candle, and that's going to be a hammer candle. So that's going to be pretty much it just for your candlesticks video. Just wanted to go through a few basic things there. Obviously there's a lot more examples, but I just kind of want to keep it nice and basic for now. So remember, I've been through candlesticks with strong bottom wicks, also known as the hammer candle, been through shooting stars, we've been through momentum candles, engulfing candles, doji candles, and obviously just your normal basic candles. So that's pretty much it. Have a good one.